You have two credit scores. You only know about one of them. And the one you don't know about, the one nobody ever taught you, is the reason some business owners can walk into a bank and walk out with $80,000 in funding, while others, doing the exact same thing, get rejected before they even sit down. The difference isn't luck. It's not connections. It's not even your income. It's called as business credit. By the end of this video, you're going to understand exactly how your Social Security number has been costing you money the whole time. Let me tell you about two business owners. We'll call them Marcus and Kevin. Both started businesses around the same time. Both made decent money, not rich, but solid. Around $60,000 a year in revenue. After 2 years in business, Marcus needed $40,000 to buy equipment and expand. He applied for a business loan. Kevin did same things. Same loan amount. Same bank. While Marcus's loan was approved for $40,000 at a 7% interest rate, Kevin's was denied. Kevin was confused. His personal credit score was actually higher than Marcus's. So what was the difference? Marcus had spent those 2 years quietly building something called a business credit profile, completely separate from his personal credit. His business had its own identity, its own score, its own borrowing history. Kevin had no idea that was even possible. He'd been running his entire business under his Social Security number, meaning every business decision, every purchase, every financial move was tied directly to him personally. That one difference cost Kevin the loan. And if you're running a business right now, or thinking about starting one, there's a real chance you're in Kevin's position right now without even knowing it. So let's break this down simply. Personal credit, the score you probably check on Credit Karma, is tied to your Social Security number. It reflects you, your payment history, your debt, your personal financial behavior. Business credit is different. It's a credit profile built around your business, not you as a person. When your business is set up correctly, it gets its own identification number. It's called an EIN, an employer identification number. Think of it like a Social Security number, but for your business. And just like your SSN has a credit score attached to it, your EIN can have a credit score attached to it too. That business credit score is reported by 3 main agencies: Dun & Bradstreet, Experian Business, and Equifax Business. Now here's where it gets important. When a bank, a supplier, a vendor, or a landlord wants to check your creditworthiness as a business, if you have no business credit profile, they default to the only thing they can find: your personal credit. Which means your personal score, your personal debt, your personal financial history. All of it is now on the table for a business decision. And that creates 3 very real, very expensive problems. When your business borrows money under your SSN, you are personally on the hook for that money. If the business fails, creditors don't just come after the business, they come after you. Your personal savings. Your car. In some cases, your home. Business credit, when built correctly, creates a legal wall between your business debts and your personal assets. Most people find this out the hard way. Don't be one of them. Problem number 2, higher interest rates. Lenders price risk. If you walk in with only a personal credit score attached to a business loan application, they see risk, because you're a person, not a business entity. People get sick. People quit. People walk away. A business with its own established credit history is considered more stable, more fundable, lower risk. That lower risk translates directly into lower interest rates. On a $50,000 loan over 5 years, the difference between a 7% rate and a 19.9% rate is over $18,000 in extra payments. That's not a small number. That's a used car. That's an employee's salary. That's gone, just because your business didn't have its own credit identity. Problem number 3, lower limits, more rejections. Business credit cards, vendor credit lines, net 30 accounts, all of these give businesses access to capital without touching personal credit at all. But if you have no business credit profile, you don't qualify. So instead you're stuck using personal cards, which have lower limits, higher rates, and every swipe hurts your personal debt-to-income ratio. Which then makes it harder to get a mortgage, finance a car, or get any personal loan. Your business expenses are silently degrading your personal financial life. Now, I told you at the beginning I'd show you how this actually works. Here's the foundation. Step 1, separate your business from your SSN. This means, register your business properly. Form an LLC or corporation. Get an EIN from the IRS, it's free, takes 10 minutes at IRS.gov. Open a dedicated business bank account. That's the foundation. You now have a business that exists as a legal entity, with its own tax ID, separate from you as a person. Step 2. Get a DUNS number. Dun & Bradstreet is the most widely used business credit bureau. A DUNS number is your business's ID in their system. Also free. You register at dnb.com. Without this, you have no file, you're invisible to most commercial lenders. Step 3. Start with vendor credit, not a bank. Here's the mistake most people make, they try to get a business credit card or a bank loan first. That's backwards. The right move is to start with what are called Net 30 vendor accounts, companies that let you buy now, pay in 30 days, and report that payment history to the business credit bureaus. Companies like Uline, Quill, and Granger do exactly this. You buy something small. You pay it on time. They report it. Your business credit score starts to build. 3 to 5 of these vendor accounts, paid on time over 90 days, and you now have a business credit profile that lenders can actually see. Here's what I want you to understand beyond just the mechanics. Business credit isn't a trick. It's not a loophole. It's the system that larger businesses have been using for decades, and for some reason, nobody teaches it to small business owners or side hustlers until it's too late. Every large company operates with a completely separate financial identity from its founders. That's standard practice. That's just how business works. The only people carrying the weight of their business on their personal social security number are the ones who were never taught not to. You know now. The businesses that scale aren't always the ones with the best products. They're often just the ones with better access to capital. And business credit is what unlocks that access, without touching your personal life, your personal score, or your personal assets. If you're building something, even something small right now, the smartest thing you can do this week is get your business properly structured and start building that credit profile. It doesn't cost much. It doesn't take long to start. But the compounding effect of having business credit 2 years from now versus not having it is the difference between Marcus and Kevin. In the next video, I'm going to walk through the exact step-by-step process to get your first business credit card, with no revenue, no personal guarantee required. The specific cards, the specific order to apply, and the mistakes that will get you rejected automatically. If that's useful to you, you know where the subscribe button is. And if you've been running your business under your SSN this whole time, drop a guilty in the comments. You're definitely not alone.